Hello friends, good weekend, good week. How are you? Vladimir here, and this is the weekly forecast 22nd of September 2013. Well, last week was a week with a few opportunities, mainly on commodities. Gold, silver did well. We got some zigzags after Bernanke's speech. We got the euro dollar and the pound flying up, all other majors, of course, as well. And since then, things a bit relaxed after the famous Wednesday. From my point of view, it still means that many things are about to happen, and I think it's a good time to be prepared for the upcoming week. So first of all, fundamental. Let's take a look what we will have this week. It all begins with today's in federal elections in Germany. Well, Merkel is expected to continue to control over Germany, to be in the head, and the biggest question is what will be actually the team, okay, the partners, who will be her partners to this parliament this time. After that, on Monday, we get news from Eurozone. We get a French flash manufacturing PMI, which was below 50 in the last time, and German flash manufacturing PMI, which surprised with a good sign of last time. Then have a speech of Draghi, right? And it continues also. Well, the first 2 days will be European zone days. It's very, very important. Then we go again to Tuesday, when we will see consumer confidence in USA to be released. New home sales on Wednesday with core durable goods orders in USA, which last time disappointed extremely. And then we have, well, probably the most important thing since then will be again speech of Draghi, sorry, on Friday, and New Zealand bank confidence of business on Thursday. So again, very fundamental week, and very interesting things most likely will happen again. So what are our opportunities? I would like to start with the indices this time, then slowly go and cover the forex and the dollar index. On last Friday, while the contracts changed during the last week, we got a strong drop down, and the weekly chart, for example, on the Dow Jones, you can see that here, okay, is trying to create some bearish inverted candle pattern. Now it's small, very small compared to all the last candle patterns, but this reversal might mean something. This reversal might mean, you know what, Bernanke, your quantitative easings and your sayings are not enough. The market is ready. Okay. Now, for a while, I have been talking about the possibility that this up move, which is the third move of 20 candles right, all in Bollingers, will be the level, most likely, or from here or a bit higher, but that will be the level here where we will see a long-term drop down again. And the reason I think so is not because I am too pessimistic on the economy, not at all. It's because this is a third time we get this 20 candles right. First time it happened, we got a small correction. Second time, we got deeper correction. Third time, normally big moves come. If you take a look back on the history, right, I don't have all the history then, but such things happen 3 times. Like here, okay, in 2006, before the biggest drop, we got an up move, we got a small correction. We got, if you pay attention here, 20 candles right. Okay, the indicator just cannot calculate that far. Then we get another one and deeper drop down, and then we get the third one, which is creating the divergence type of the same as creating right now. Okay, creating the divergence without 20 candles right. We got only 15 candles right. Then we got correction, double top, and then we all remember what happened. Now, I don't claim 2007, 2008 will repeat itself again, but I definitely think there is a lot to go, and I do think that after the first correction to the second correction, there is a beautiful trend line that should be retested, and I will not be surprised if during the next several months that's the direction that will lead this index again. Now there is one thing to pay attention to. First of all, I'm talking about the Dow Jones, but I relate myself to everything. Okay, the S&P, the Nasdaq. Sorry, that's not Nasdaq. That's, where is my Nasdaq? Here we go. Okay, and Nasdaq, the same thing, all under heavy divergence. Now there is one thing to remember. I will continue with the Dow Jones, with your permission. From my point of view, I will go as low as to the 4-hour chart. This level, this is daily chart, and this is the 4-hour chart. That's the zone. That's the most critical zone from my point of view. Okay? This is the level where it has to place itself again, third time, in order to gain some real momentum. Place, I mean, not just spike below, I mean hold below as long as possible, like 2 or 3 days, 4 days, or even a week. Hold there successfully below. That should regain the momentum. Now, that still could be like a type of head and shoulders, or it still could be a channel. Doesn't matter what pattern you name it. Okay, the most important thing is that what it represents. And this level, once will be broken, from my point of view, it should take us first stage down to the support I just showed. Okay, the long-term support should take us down to here. And if it managed to break it this time, that might be the beginning of a drop all the way to the weekly zones I showed you before. Know that this double spike take us to the same level. You see that? If this line broken, here we go. That's what I expected to drop during October. Okay, here we go, in case it really makes the first breakdown. Okay, you can find the same levels on S&P and everywhere actually, and it's pretty interesting. What I would suggest is don't overexpose yourself to the indices. Choose one index or two less volatile, like for example Dow Jones making 100 points like nothing. Okay, Nasdaq and S&P are much less volatile, and it's better to be there. If you want to be something more conservative, consider to be there. Okay, if you want the more volatile, not less, if you want the more volatile, then you can find the DAX, also very attractive. And same story with the weekly divergence, only question of time when it makes it. And here also you can find this most critical zone to be broken. Here we go. That's the level, has to be broken in order to regain the momentum for another drop. All right, that's about the indices. Now let's forex a bit. Euro dollar and pound dollar. So they both made a move after Bernanke, and they're kind of fixing themselves during the last 2 days of the week. That's double doji. Double doji many times is a pattern where it all start to invert from and reverse from, but here MACD is still very bullish. So from my point of view, as long as we are holding this double doji and not breaking down, like strong down, the 10 of the euro dollar should be still bullish, and I think the euro dollar is able to take us back to, if this is the bottom zone, euro dollar is able to take us again to the upper zone, which means something like the 136, 137 again, maybe even a bit higher. Watching on a weekly chart, it's definitely the direction. Everything still looks good, and it might push a bit more. 136, 137. Then 138 might be a target again. But, and here is a big but, I think if we manage to push there, we are going to have extreme. And extreme in this case means drop down. Now the elections might contribute to the euro dollar strength, unless there will be some crazy surprise in Germany. As you know, Merkel likes the euro, and she does not want to see the euro dollar suffers too much, or the euro currency losing its strength. But on the long term, okay, if we leave all this politics aside, on the long term, they need, all the eurozone, they need weak euro, and that's what's going to happen. So for the short term, I think we are still looking to the upside, and I would keep my bullish opinion at least as long as this line is holding. This 4-hour chart line will hold. If this line will manage to break itself, I would be more cautious and looking I'll be back to neutral, looking to find bearish opinion. But as long as it holds, I think it's able to take us to 136, 137, maybe 38, and then bam, drop down, and that's going to be strong this time. Pound dollar, same story for a while. Right from here, I was talking that we might push up to the next resistances, create extreme, and note, it just was created on the Wednesday, right? The night after Bernanke, and then bam, all the way down. Since then, something like 170 points. What's next? You might wonder. Well, we're still under bearish hidden divergence on a weekly, but I will not be surprised if pound dollar from here will try to push back to bit lower than the previous top, or maybe double top it again, or even a bit higher. I will not be surprised at all. But from my point of view, this zone is the top. And if to invest in something, I would start to invest in shorting the pound and the pound pairs actually. Okay. And so, like investment, as I said, I think down, and I think day 20 MA will be the first target, and that's actually the gap close. That's something like 150 pips more below. But every rally we get on the pound, I think it's opportunity to sell. What I suggest is you pay attention to this line. It has to break itself in order to gain the momentum and the support, of course. Then I would expect it to drop down to the next trend line, which is right here, even below the gap close. And after that, of course, we will reanalyze and watch on the daily forecasts or the next opportunities. Anyway, I keep bearish opinion, and I will be looking to sell rallies only. Pound is too expensive. Euro pound, I've been talking about this pair too on the previous weekly forecast and during my last daily forecast. I think this pair is able to rise all the way to close the gap, maybe a bit higher. I think it's up as long as it does not create for us a bearish hidden divergence. It's a bit far from there. And as I said, every drop down, even if it's to new low, okay, even if it's to new low, don't be surprised by that. Even if it drops lower, we were looking for the next divergence only to buy. I think the cycle should continue to the upside, right from here a bit higher, or if it drops down, then with the next divergence, much deeper cycle to the upside. So I still keep my bullish opinion, and I would say buy valleys. Every valley you see, real valley, which follows a bullish divergence on lower time frames, just go and buy it. Okay. When I say lower, I mean 4 hour or 1 hour. For example, on the last daily forecast, I've been talking about this convergence, where we should be looking to see a drop down in order to regain a bullish momentum. And here we go. We got this bullish divergence. That's the one I've been talking about, right? You see, between these two lows, there is a bullish divergence. See, low to low, creating a bullish divergence on the MACD. Here we go, and here. The big one did not create a bullish divergence, but the last two ones did. And you gotta push up. Now, could it correct deeper before it continues much higher? Of course. And that's why I say buy valleys on the euro pound. Yeah? That's my view here. What about the yen pairs? I've been asked about that not many times actually lately. Now, yen pairs, from my point of view, they're going to top on the next several weeks. It could happen any week, right? But they're going to top. Why? Well, first of all, the monthly chart starts to create a continuing divergence. Monthly chart has a bearish hidden divergence already. Monthly chart is dancing around the over both on the stochastic, and RSI is reaching the top levels as well. Now, could it push a bit higher, like 138 for the euro yen, for example, or a bit higher? Yes. But then we will have to pay attention for the monthly bearish hidden divergence, and here you go, this bearish continuing divergence forming on the weekly chart. Now, I've been talking about a potential wedge to create itself, something like that, or even from here. Okay, that's a potential wedge creating itself right now live, and I think it's going to top during the next several weeks and then begin the drop down. To make long story short, I think as long as the deep trend line, the euro yen started to create itself, will hold, I keep my bullish view, and I would say that as long as this line holds, look to buy volleys. I think the euro yen is going to 135, 136, 137, maybe even 138 directly from this zone. So look to buy volleys. Every drop down following a bullish divergence, this is 4-hour chart for example, every drop down following a bullish hidden divergence to be created is opportunity to buy. And this is how I think the euro yen is going to act. Same about the pound yen, which from my point of view should reach, according to this monthly and weekly, the 162, 163. There is an amazing divergence building itself now, so from here I would expect drop down, and a powerful drop down, a real drop down this time. Monthly chart, same story. It starts to create something that reminds continuing divergence. RSI is aiming an extreme. Last time it did that was twice actually, was here, and then it got a huge drop there. See that? That's the levels of the RSI, as you can see. Okay, here we go. That was the last time we got it. Then we got 3,000 pips drop down, then much deeper, and here of course. And that's why we are here almost again. So I think right from here, pound yen is about to create some monster divergence, monster stop, and bam, dropping down hard this time. And again, for pound yen as well, I think buy volleys, buy real volley. Well, here it's not, there is no clear trend line to hold, but there is definitely clear support to hold, and that's 156. So as long as we are above it, I think up, and I think 162, 163 is reachable, at least, maybe even more. If this support will be broken, then it will be time to reanalyze things. But as long as it holds, look to buy volleys. And then now I go for the Canadian pairs, which I find very interesting opportunities. This is pound Canadian, and pound Canadian, extremely interesting for me. As I said at the beginning of this video, I would sell rallies on the pound, every pound. Now, pound Canadian, there is one problem with that the monthly chart, it broke this resistance and the Bollinger Bands, NRSI, everything up. So I think it's able to take us up to the 170, a bit lower maybe. And I would go and trade this bearish cycle to come this way. This is a daily chart. Okay, let it rise from here and look until it completes a divergence with a clear bearish candle pattern with a divergence, and then go for a sell. But do it like an investment, because from here there is a lot to drop, in my view, all the way to this trend line. So the higher we will push, and we might push all the way to this meeting of the line, see, something like that, up, and then bam, drop down powerful. So look for sell opportunities from top. The only way to go for a sell before that, or alternatively, will be with the break of this trend line and the most important support zone, which is below 164 a bit. That would be the only way to jump in before and earlier before this ride. Okay. Euro Canadian is opportunity for the short. I've been analyzing that on the daily forecast. Now there is one thing to pay attention to. We are retesting this line now. Here you go, through the spikes. And as long as we are below the line, we should be looking for sell opportunities on the shorter. The risk is very small here. The risk is very small, and the potential is very big, because if it does stop from here and make the retrace, the chances of this pair to make A, B, C, D like this starts to be very, very high. Okay, and then we might go all the way to the big trend line and the 200 moving average meeting. So the risk is very small, but the potential is very, very, very big. And that's why I think we should combine the 4-hour chart divergence. Okay, I'm looking for a clear candle pattern to enter with a small risk, and then to jump in. Alternatively, go to the 1-hour chart and go to sell this trend line and the support meeting. Okay, so it worth the risk from my point of view. What about the Australian dollar and the New Zealand dollar? Well, these pairs I will analyze on the daily forecast. Sorry, but there is one pair I would like to analyze, and that's the Aussie Kiwi. Aussie Kiwi, I was looking to buy, but I told you that if it managed to break here, that's the level. Remember, after the New Zealand news, then I will be neutral, and I was neutral, and I was looking for a clear stop. There is no clear stop yet. Watching on the weekly chart, there is 20 candles right. There is a divergence building, and there is something much more interesting. Take a look on the history, friends. You know, the history is a good and interesting place to see what most likely is about to happen. Now, take a look. This is that separates Octobers, each year October. Okay, and I go back on history all the way until 2004. I can go much more, of course, but I have these 9 years. Okay, so what happened since then? Okay, take a look. Up, 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 up. After a huge drop, up again. 2008. Up, up. The only place it was down was in 2005. 4, up again. Okay, so and of course, if you wonder what happened 2003 October, here we go, we got up again for 200 pips for the first 2 weeks, then flat, and then down on November. So October is a bullish month, especially on every time that we got a drop before. And that's why this divergence comes perfect timing with the cycle, the season cycle on the Aussie Kiwi. And that's why I think that, I remind you first of all, do you remember this weekly harmonical pattern? This is, and it's difficult to put the finger on the exact level, but this is the zone where it's all about to happen from. Be ready. Okay, I think 112, 110, maybe even 18, all levels are possible. We are looking for a clear stop on the weekly chart, clear stop on the daily chart, with maybe with extreme, maybe with another divergence here, and then I expect much longer cycle to begin. So I remind you, we've been long all the way until 116, 118 a few weeks ago. It did stop on 116, 118, then we got a drop down, and soon it will be time to invest for a very long run on that. Now, about the gold and the silver, I told you, as long as we are holding this line on the 4-hour chart, we should be looking for buy opportunities. This line never hold, and that's why it's time to stay away. There was no chance to jump in, and that's why we are leaving that alone right now. And of course, we will follow that to trade it during the daily forecasts, but as for now, for the long term, nothing to do here. That's all for this week. At the beginning, there are much more opportunities, but these opportunities I keep for the daily forecast and the shorter term. Okay, I'll show you here the opportunities for the longer terms as well. Now, just a quick update about the dollar Turkish and the dollar ZAR. I think I updated that on the weekly forecast. Anyway, from my point of view, every rally is opportunity to sell. Okay, and there is much more to go. So from my point of view, every rally opportunity to sell. But I do hope that you followed my instructions on the daily forecast to took at least some profits. Soon we will be looking to rejoin. That's all, friends, and thank you very much for watching this video. I wish you a fabulous week, and I'll see you on the daily forecast, of course. Good trading, and thank you for your time. Yours, Vladimir.